AHI trade of the day, absolute monster, 800% gainer. It's actually still moving after hours. We just went from 215 to 270. Look at this thing. Look at this thing go. 280, 285. I got to pull up my level 2 for this. 290. We just printed 290. Wow. All right, so we'll keep eyes here on this AHI. If there's a trade here on it for us, in the after-hours session, maybe we'll have some fun here. Maybe we can trade this thing through that 325. I'll tell you now, I'm probably not going to trade this after hours, just because in order for me to trade something like this with the size that I like to trade with, it requires my undivided attention. I'm not really able to give it my undivided attention right now. We hit an absolute monster home run on this trade earlier today. And this brings me to the lesson that I want to go over with you guys here today. There's $3. Now we're printing $3. Very interesting here. The volume is still pretty good too after hours. Pretty good volume after hours. Yeah, I'll keep an eye on it. I will keep an eye on it, guys. Now, for those of you that are not members, I suggest you pay very close attention because I'm about to give you a little bit of a free lesson here. This is a very valuable lesson on how to use the trade line properly. How you use the trade line properly. What is the trade line, first of all? The trade line is a momentum-based indicator. Do not open up your trading platforms right now and start looking for a trade line because there's no such thing that is the trade line in your charting platforms. And there's new highs on AHI 350. The trade line is common tongue for just trader talk. What it actually is either the 8, 9, 10, 11, or 12 exponential moving average. That's what the trade line is. Again, you can use whatever your preference is. I use the 9. So I use the 9 exponential moving average, so the 9 EMA. That is what I use for my trade line. You can use the 8, the 10, the 11, the 12. They're all very similar. There'll be a couple pennies off. They're all very similar. It's really just personal preference. But that's the trade line, okay? It's a momentum indicator. Now, what the trade line helps you with is it helps you identify when a stock has very clear directional momentum. So stocks go through phases. You have consolidation phases, you have breakout phases, you have follow through and continuation phases. So when a stock has clear directional momentum, I'm not talking about consolidation. When a stock is consolidating, the trade line is useless. So this is what I mean by understanding how to properly use the indicator. A lot of people out there that you're going to go and you're going to try to find, trading information and education and courses, whatever it is, they're going to teach you about indicators, but they're going to tell you, oh, use this indicator as if it's the holy grail of trading. There is no special indicator that works 100% of the time. It doesn't exist. Stop looking for it. There are times when one indicator works perfectly. There's other times when it doesn't. It's your job to determine which indicators are having an impact on the price action of that stock. Not every indicator is going to work every time. It's on you to be able to identify it. That's the lesson I'm covering with you today. How to identify that the trade line is a viable indicator that is affecting the price of the stock. And if the trade line is affecting the price of the stock, there's a very good chance that that stock is about to experience clear directional momentum. And that is how you can be able to capitalize on price action and capitalize on these big moves, right? Inexperienced traders will always say, how did you know the stock was going to make a move? These are the type of things that experienced traders are able to use to make that determination. It's not because we're psychic. It's because these are the tools at our disposal. And when used properly, it drastically increases your chances of success. Trading is not about predicting the future. It is about identifying high probability patterns. Any poker players that are out there will completely understand this. If you are a very good poker player, you know that being a good poker player is not about predicting what cards are about to come out on the table. It's not psychic that you know what card is about to come out or that you know what card the other player has. What being a good poker player is all about probability. It's all about understanding the cards that are in your hand, the cards that are on the table, and what is the probability that you have the best hand out of anybody that's sitting at that table. And then obviously the skill element, which is being able to read other people's tendencies to say, I think that person's full of crap, or maybe that person just gave away their hand. That's where the human and the skill element really comes into play. Trading is a lot like that. Being a good trader is identifying, having the education to understand what an A quality setup looks like. An A quality setup has 70 to 75% probability. A B quality setup, 60 to 65. A C quality setup, 50-50. I'll teach you guys the difference between A, B, C, and you just now have to have the patience to wait for all the A's. So let's talk more deeply about this trade line, 9 exponential moving average. There is a momentum trigger that is referred to as the trade line VWAP crossover. The trade line VWAP crossover, and this is something that you learn as a member of True Trading Group. And I'm going to teach it to all of you that are not members. And this is a little piece of education, and I'm going to give you guys out here for free. The trade line VWAP crossover is a momentum triggering indicator. It's a momentum triggering setup. When it happens and when it's confirmed and verified, and I'll explain that in a second, there's a high likelihood, not 100%, but a high likelihood that the stock is going to experience a momentum-based move in the very short term, the very near future. And that trigger could get you into your position before the stock makes a big move. Trade line is this teal blue line you see on my screen. See that teal blue line? That teal blue line is the trade line. Again, 9 exponential moving average. The orange line is my VWAP indicator, volume weighted average price for those that are brand new. That's the average price that all the shares are being traded for the day. So that's VWAP, orange line. Trade line, that turquoise teal line. When a stock is strong, key word there, the stock is strong. It's gapping up. There's a piece of news. It just broke above a key level. When a stock is strong, obviously AHI was strong today. It was gapping up big in the very morning session. When the trade line crosses, because the trade line will always start underneath VWAP when a stock gaps up. So when a stock gaps up, your VWAP indicator will always be higher than your trade line. And as time goes on, the trade line will start to catch up. When the trade line crosses above and over VWAP for the first time during the day, that's when you really need to start paying attention. But it's not enough just for the trade line to cross above VWAP. I'm not sitting here telling you, do not confuse what I'm saying. Don't now just go and tomorrow, every single stock that you see the trade line get above VWAP, go and buy it. That's not a sound strategy. You need to verify the trigger, which is the trade line VWAP cross, to know that the probability is high. How do you do that? When the trade line crosses over VWAP, you want to see two very specific things happen. When the trade line crosses over VWAP, you want to see a dramatic increase in share price coupled with a significant increase in trading volume. You want both of those things to occur at the same time the trade line crosses above VWAP for the first time. When that happens, the likelihood of the stock experiencing a short-term momentum move is high. Again, not 100%, but it's high. And this setup also applies to the downside. You can also use this to short stocks. Okay, now if the stock gaps down and the trade line will start above VWAP, and when it crosses under it for the first time, again, watch for the volume increase, and instead of a sharp increase, look for a sharp decrease in volume, and that can give you some indication you're going to get some momentum to the downside. But in this case, we're using it to the upside. So this is what the stock looked like this morning. Again, we did not enter this trade yet. Then what happens? Watch the trade line. Watch the trade line. Okay, now the trade line has just crossed above VWAP, right? Let's zoom in. You see how right here, you see how the trade line crosses over VWAP? Now let's play it out in real time, right? Let's play it out in real time. So there you go. You're crossing over VWAP. Now let's go to the next candle. Look at that. Okay, now what did we just see happen? Now, what did we just say? What confirms the trade line VWAP crossover? Two things. Dramatic increase in share price. Well, I think it's safe to say that's a dramatic increase in share price. Wouldn't we all agree? Wouldn't we all agree that's a nice increase in share price, right? But then you also want to see an increase in trading volume, right? You also want to see an increase in trading volume. So I'm going to make the volume a little bit bigger so you guys can see. And if we can maybe just drop the message at the bottom of the screen, Joe, just for one moment so I can show people the volume, making the volume bars bigger so you can see them better. Would you guys consider that an increase in volume? Fair to say that that's an increase in volume, right? It doesn't take a master chartist to say that, wow, that's a big candle. That's an increased size of the candle. Well, that tells me that now confirms the trade line VWAP crossover. Because those two things happened. Sharp increase in price, sharp increase in volume, right? Let's bring the volume bars back down so we can focus on the charts again. Once you have verified the trade line VWAP crossover, what you look for now is for the trade line to act as support. Because when a stock has clear directional momentum, the trade line will act as resistance when there's directional momentum on the way up. It acts as support when there's directional momentum on the way up, resistance, directional momentum on the way down. When there's clear directional momentum, the trade line will just hug that stock. It'll hug it. So after you confirm the trade line VWAP cross, be ready to buy the next time the stock gets back to the trade line. It's exactly what we did. There's your trade line VWAP crossover, right? the stock goes absolutely ballistic, right? See, the stock goes absolutely ballistic. But look at how already the trade line is acting as a level of support. Now, I wasn't looking at the stock at this time, right? So AHI was not on my watch list at this very moment. It wasn't until the stock did that and halted that now all of a sudden my scanner's going nuts. Members are calling it out in chat. Everyone's like, AHI, AHI, AHI. Okay, we got to pull up the chart. We got to take a look at it. And then we look at the chart and we say, wow, guys, that's a textbook trade line VWAP crossover. I'm going to get long when the stock pulls back into the trade line because I know that when you confirm the trade line VWAP cross, the chances of the trade line being support on the first test pullback is very high. Stock comes out of the halt. See how that little dash is a halt. Comes out of the halt and just immediately rips to the upside. Rips to the upside. Oh, but look at that. Trade line still acting as support. I couldn't buy it there either because the stock just absolutely explodes right out of the halt. I couldn't even get into it, right? Then now it opens back up for trade and now it's consolidating. But now I can look for that pullback into the trade line. We halt again. Then the stock opens up and we pull back back into that trade line. And that, my friends, is where and the whole stock is halted again right there at 135. The stock is halted at 135. And that is when we stepped in and we got long right out of that halt, right there at $1.38. Right there is the entry on AHI. Right there is where we took the long, $1.38. Okay, the stop loss was right here. So there's the entry, there's the stop loss, and the rest is absolutely history as the stock experiences that directional momentum, okay, to the upside, continuously holding support when it gets to that teal blue line, which is your trade line, and that allows us to capitalize on this gigantic move from 130 all the way to $2.08, whatever the high of the day was on that. And that is how you use the trade line to make a determination when a stock is about to experience momentum and when it does have momentum, where you can identify buy points so you can ride that wave of momentum.